Thank you, Laura. Good afternoon, everyone. My name is Bria Haley. I'm the lead grants management specialist for the Flex program. Today, I will be going over the FFR and providing a few post-award reminders. Next slide, thank you. Recipients must submit the annual FFR. The report reflects the cumulative reporting within the project period for the document number. For the budget period, September 1, 2022 to 8/31/2023, the FFR is now due November 29th. This is 90 days after the budget period end date. Next slide. Recipients who do not have access to payment management must submit a new user request. Here's the link below. And recipients who currently have access to payment management and are submitting the FFR on behalf of the organization should go into payment management and update their permissions to request to access the FFR module. This is if you were the person submitting the FFR when we used to submit it in EHB. Please note, it can take up to 3 days to process the new user request. Next slide, thank you. The FFR workflow. So recipients will navigate through several sections of the FFR to enter their financial data. First, the prepare report section. The FFR has several pre-populated fields, including the federal agency name, grant number, organization name, UEI, and EIN. And then the basic information section. This is where you'll see the report frequency, also known as a report type. These are pre-populated fields based on the awarding agency requirements. We have the basis of accounting must be selected by the recipient, so it's either cash or accrual. And then the project period, reporting period, end date is also pre-populated from the awarding agency. Next slide. The FFR transaction section. In this section, the first 3 fields are 10A through 10C, and they've always been captured in payment management. You have the cash receipts, which is pre-populated based on the drawdowns. Can you go back one? Thank you. And then the
sorry about that.
That's okay. You have the cash disbursements, which is pre-populated based on the disbursements last reported in payment management, and then the cash on hand, which is auto-calculated. Next slide. So continuing on to lines 10D through 10H, it is very important that the information in this section is correct. Line 10D is the total federal funds authorized, which is pre-populated from the award document. Line 10E is the federal share of expenditures, which is entered by the recipient and should be cumulative for the grant document number. Line 10F is the federal share of unliquidated obligations, which is also entered by the recipient. And then line 10H is the unobligated balance. This is pre-populated, and the unobligated balance is also known as the UOB. Next slide. So the unliquidated obligations and the unobligated balance. So first, the unliquidated obligations are the costs that have been incurred but not yet paid, or costs incurred but the expenditure has not been recorded. If you have invoices that you have not paid or funds incurred that you have not drawn down yet, those are your unliquidated obligations. If you have unliquidated obligations that are not reported on the FFR, then they will be included in the unobligated balance. So note that only the annual FFRs can include unliquidated obligations. The final FFR must not include unliquidated obligations. You must liquidate all of your expenditures before submitting the final FFR. So moving on to the unobligated balance. Again, this is pre-populated and it's based on the authorized amount minus the reported expenditures. So here's an example. So let's say the authorized amount is 100,000 and the expenditures are 50,000. Then your pre-populated on the FFR unobligated balance is going to reflect 50,000. Note that if it is determined that the unobligated balance of federal funds is correct, HRSA is not obligated to make any additional federal funds available to cover the shortfall. So again, we just want to make sure that all of the information in the FFR transaction section is correct. Okay, so we have an unobligated balance, and what can we use it for? So you can use the unobligated balance as carryover in the next budget period, or it will be used as offset, will be used to offset the amount of new federal funds awarded in the following budget period. Next slide. Thank you. Carryovers and offsets. So if you have an unobligated balance, you may request to use those funds as carryover in the next budget period. You must note your intent to carry over funds in the FFR remarks section of the FFR. You must include if the UOB funds are from the flex program funding or the supplemental funding, and here are the cans below. You must request prior approval in EHB to use the UOB as carryover within 30 days of the FFR submission. If you do not request prior approval to use the UOB as carryover, you are not authorized to spend those funds. If your carryover request is approved, you will receive a new revised notice of award that reflects authorization to use those funds as carryover. Please do not use the funds as carryover until you have received the approving notice of award. Offsets. If the unobligated balance is not used as carryover, then it will be used as offset in the following budget period. The offset does not change the current budget period's authorizing amount, but it does reduce the amount of new fiscal year funds provided to authorize the award amount. So here's an example. Let's say there is a UOB of $20,000 from FY21 that was not approved as carryover. And the authorized amount for FY23 is $100,000. So HRSA is going to provide $80,000 of new FY23 funds. And then we're going to take the $20,000 UOB from FY21 as offset. So the $80,000 of FY23 funds and the $20,000 of the FY21 funds combined will provide the authorized amount of $100,000 for FY23. Hopefully that is not confusing, but if it is, and if you have any additional questions regarding offsets, just please feel free to email me and we can discuss it. If you have carryover and or offsets, that will be reflected on your notice of award. So just please review your notice of award carefully and also review the terms and conditions section of the notice of award. Next slide. Okay, here's the FFR remarks section. The FFR remarks should be used to provide details and any explanations regarding the report, the intent to use the UOB as carryover. If you have to change the prior year expenditures, please include the value, the budget period being changed, and the reason for the change. Next slide. Okay, and then here are some additional reminders for the FFR and carryover. Again, it's due November 29th. Please use the FFR remarks section to express your intent to carry over. And then here's an example of how to do that. So we have the REH funding. If you have unspent funds from your REH funding, you must document the can that the UOB comes from. We have the flex can and the REH funds listed again. And an example, if you had $20,000 of UOB from REH funding and $10,000 from the flex funding, on the FFR, it will be cumulative. So it will show a $30,000 UOB. And you can just think, like the example, we do not intend to request carryover of the $20,000 UOB from the following can, and we do intend to request carryover of $10,000 UOB from the following can. Next slide. Thank you. Here are a few reminders, post-award reminders that require prior approval requests. Key personnel change, which is the project director, authorizing official, or business official. Please include the cover letter and resume for the key personnel, and also make sure that all of key personnel are registered in EHB. Carryover, of course, if you have rebudgeting 25% or more of the total funds, and if you need to request a new budget category, that also requires a prior approval for rebudgeting. Change in scope, administrative supplements, extensions to the project period with or without funds, and then other prior approval requests could be organizational changes, name changes, UEI updates, EINs, drawdown requests, transfers, and relinquishments. Next slide. And here is the contact information for me. If you have any questions regarding your FFR that is not resolved using the payment management self-portal, please feel free to email me and any other fiscal budgetary related questions.
Bria, we did have a question come in the chat that I think you would be the right person to answer this. Someone asked, are purchase orders considered unliquidated obligations?
Yes.
Perfect. And there was another question that came in the chat, and I think it would be helpful for everybody if I say this. So I know for most of you, your FFR, you do not develop your FFR. Your finance departments develop it. And so the question is, do you all as the flex coordinators need to tell them which part of the UOB is your regular flex funding and which is that supplemental REH funding? And that answer is yes. We will need you to be sure to tell them which one that belongs to, and they can document what it is. And again, there will be detailed instructions that get emailed out to everybody about all of this. Again, if that helps to be able to send that document over to them. Yeah, Scott, did that answer your question?
Yeah, I think so. So basically when it's a whole process here. So basically when it starts getting developed, I'll have an idea of what piece is the UOB for the REH funding, and I can just say, make sure you give this code to that piece. Is that correct?
Yes, exactly. And the reason why is because that REH funding, it cannot be used as an offset, but the regular flex money can. So we have to document that.
Okay.
Yep. And okay, I'll answer these next questions before we keep going. If your department is given an offset 1 year, will the following grant period roll back to the full amount in the following year? So the answer is essentially yes, but we're not, if you have an offset, like Bria explained, I'll put this in here. I'll go back a couple of slides. We're not reducing your amount, the amount of your award, right? And Bria, I might let you jump in here, but essentially it's just reducing the amount of new funds, but it is still the same total amount. Did I get that right, Bria?
Yes, that's right. The amount, the authorizing amount is not reduced, but like she said, the new money is. So we're going to take the UOB from prior year funds. So it's not from 2022, it's from FY21. It's a year back. And then we'll use that to make the difference. And then total, you'll have your authorized amount, but the authorized amount is not reduced.
Perfect. And the last question, will we receive new notices of award reflecting the FFR due date and carry forward due date for the current flex year? So the FFR due date is already reflected. The change is already reflected in this current NOA that everybody received. It says due 90 days after the end of the budget period. For the carry forward due date, that was a typo on our part. So no, we will not be issuing new notices of award, but that will all be put in the instructions that I send out, and everybody can send that on to their finance folks. Okay, so I'm going to go ahead and move forward so we can get going because we have a lot of information to cover. If there's any other questions, feel free to drop them in the chat. We can answer them at the end, or we can roll up all the questions and I'll send everybody an email answering all of them. For anybody who might be one of the finance reps that's on this call who came to listen to Bria's presentation on the FFR, you're free to drop off. The rest of this is going to be very program specific. Everybody else, sit tight. We're going to keep going. Thank you so much, Bria. We really appreciate it.
Thank you. Thank you for having me.
Thanks.